So guys, let's start. Where did we stop? We stopped at question 9, right? We did question 9, if I'm not wrong. Can someone confirm? We have to do question 10, right? We have to do question 10. Am I right? Okay, let's start. So guys, the question 10, following information has been extracted from the books of Padma traders. So they have given the opening trade receivable and opening inventory, closing trade receivable and closing inventory. So let's first of all read the requirement, guys. The requirement is what is the purchase value to be shown in the profit or loss statement. So guys, they are asking you how much is the purchase. So purchase will include cash plus credit purchase. So all the purchases of trade goods made during the year. So you should understand there should be a reason for them giving the opening and closing trade receivable values and stuff. Okay, that means you have to calculate something. So now see here, cash received from trade receivable is 656,000. And the business is determining the selling price by adding 25% on gross, 25% gross profit on sales, markup or margin. Y'all can unmute also, guys. Markup or margin. 25% on sales. Yes, it is margin. It is margin. When it is on sales, last class I explained y'all, it's on margin. Okay, so let's just put it here. You know, guys, sales, when you take the sales, okay, and you deduct cost of sales. Cost of sales is opening stock plus purchase minus closing stock gives you cost of sales, right? So when you do that, you will get the gross profit. You will get the gross profit. Sales minus cost of sales gives you the gross profit. Guys, when you get whatever question you get, I always tell you all, please put the values of the information given. Whatever information they have given, first of all, just put all the information they have given in the paper. Okay, then automatically one by one you will get the answers. Okay, so now see here, they have told you opening inventory is 62,000. So record here opening inventory 62. Closing stock is given, that is going to be 78,000. 78,000. Okay, and then now they have given you trade receivable, guys. If they have given you the trade receivable information, what is the first thing you need to think, guys? Why have they given? To find what? To find what have they given the trade receivable values? Very good. To find the sales. Guys, through the trade receivable account, you can find how much is the sales. So let's quickly draw a trade receivable. Okay, let's draw a small trade receivable control account and then find the sales value. They have given you the opening trade receivable. They have given you the closing. So opening, it's an asset, no guys, write it in the debit side. Opening is 124 and the closing is given. It comes in the credit side. Closing is 108,000. Okay. Then guys, they say the cash received from trade receivable is 656,000. When you receive cash, trade receivable, debit or credit? When you receive cash, think about cash first. You receive cash means cash will increase, right? So cash increases is debit side. So that means trade receivable should be credited. Very good. Trade receivable should be credited. Go to your trade receivable and you will say cash and you will credit it 656,000. 656,000. So then guys, what else have you not yet recorded? So that's it. Now let's quickly find the sales value. Okay, so credit side is bigger. Put the credit side in both the sides. Yes.
Have they done all sales on credit basis?
Yeah, if they don't tell you anything about cash, you should always assume that it's all on credit. Guys, if they have done a cash sales, you will be able to find it. They would give a hint. Okay, but here they are not telling anything related to cash sales. So then guys, we should assume that all the sales are made on credit. Okay, so guys, now say, because from the trade receivable, guys, the difference you get is credit sales, not cash sales, because trade receivables you only record credit sales, right? So the difference is going to be the credit sales amount. So how much is that? That is going to be this minus this. So your sales is 640,000. So go and put it here. Your sales is 640. So guys, our main purpose is we need to find the purchase, okay? Our main focus here, guys, we need to find the purchase because that is the question. That is the requirement. They're asking you to calculate the purchase value. So now see here, now you know it's on margin. Margin means sales is 100% or the cost of sales is 100%. Quickly reply. If it is margin, sales 100% or cost of sales is 100%, guys. Yes, your sales is 100%. So if your sales is 100%, okay, if your sales is 100% and you know the gross profit is 25%, that means how many percent is your cost of sales? That means how many percent? Yes, I couldn't hear.
75%.
75%. Cost of sales will be, guys, 75%. Okay, so that means, guys, your cost of sales is going to be 75%. Now you need to find how much is this 75%. Now you know sales minus cost of sales is gross profit. No, if sales is 100%, okay, gross profit is 25%, that means your cost of sales will be how many percent? It is 75%. So you know, guys, sales is 100%, right? 100% sales is how many rupees? That is 640,000. 100% sales is 640 means you can find how much is 75%, right? So what you have to do, 640, you divide by 100, you get 1%. You multiply it by 75, you will get 75%. So your cost of sales is 480,000. Anyone who didn't understand that? Anyone who didn't understand how to do that, quickly tell me. So your sales is 640,000. It is 100%. So you divide by 100, you will get 1%. And then you multiply it by 75, you will get 75%. So actually we don't need the gross profit value, but I just put it there. Now, guys, we will easily get the answer because we know the cost of sales. Cost of sales is 480. So guys, you know that if I just put it in a horizontal equation, cost of sales is opening stock plus purchase minus closing stock, right? So now you know the opening stock is 62, but you don't know the purchase. You know the closing stock is 78. Okay, closing stock is 78. And you know the cost of sales is 480,000. How much is your purchase value? How much will be your purchase value then? Find P. Yes, 496,000. So your purchase value, guys, when you solve that, your purchase value will be equals to 496,000. The answer for this question, answer is going to be third one. Third one is the answer for question 10. Okay, so guys, this is a very easy question actually, because now you all know how to do this method, right? When they give you the trade receivable, always remember you have to find the sales. They give you opening, closing, they give you the cash receipt, then you should understand they are trying to tell you to find the sales value. Okay, so you find the sales, put the sales in the trading account, and you know the opening stock, you know the closing stock, you find the cost of sales using the margin. Okay, margin means sales is 100%. So like that, then you go backwards, you get the purchase value. Answer is third one. Anyone who didn't understand, ask me. If not, I'll continue. Okay. Question number 11. Question number 11. The following information has been extracted from the book of a manufacturing business for the year ending 31st March 2019. What is the production overhead for the year ending 31st March? Okay, 2 minutes. Send me the answer. I'll give you all 2 minutes. Do quickly and send me the answer for question number 11. Okay, remember the manufacturing cost, how to calculate. Remember that and try to do question 11 and then send me the answer. Okay, let's see whether your answers are correct. Okay, wait a minute. Please send it to me privately. Okay. Question number 11, answer. Afaza, check again, Afaza. Wait, I don't know whether you sent it for the previous question. Shimra, question 11, answer is correct. Good job. Sajida, you have to check again. Guys, this is see the order of the numberings. Okay, they are putting like this 1, 2, 3, and then 4, 5. Okay, sometimes you might see that wrong and send the answer incorrectly. That's why I'm just telling that. Jivana, you have to check again. Afia, check again. Hafsa, Rimaza. Okay, now Jivana, that's correct. Shifna, check again. Safa, correct. Aisha, check again. Sajida, Zahra, and Shahla, correct. Afka, check again. Safana, correct. Good job. Okay, quickly send me the answers once you're done. Shehana, correct. Nazifa, check again. Hafsa, correct. Okay. Okay, guys, let's start. I think that's enough time. Okay, so your exam you will only be given with 2.4 minutes. Okay, you have to do it within 2.4 minutes. That's it. Nazifa, correct. Now they have given you, they're asking you what is the production overhead. Okay, so you know, guys, how to find production cost. If you take production cost, since they have given prime cost, I will also start from prime cost, and then what you have to do. Okay, yeah, so prime cost, then you will add the production overhead, and if there is any change in work in progress, you have to do the work in progress adjustment. Okay, you have to do the work in progress adjustment, then you get the production cost. Okay, so how to find prime cost? Direct material, direct labor, and direct expense. Okay, Afaza, correct, and Afka, correct. Okay, guys, now I know most of y'all do mistake in this one. I don't know whether y'all were there when I was explaining how to find that. Okay, I always explained that, but don't know, some students y'all were not there. Okay, now say the prime cost is given 2,400. Okay, and the total production cost is given, that is how much? 4,000. Total production cost is 4,000. Okay, just put whatever information they give you. Now they are asking you to find this. They don't know how much is the production overhead. They are asking you to calculate that. Okay, now see here, work in progress adjustment, we don't know whether it's on prime cost or production overhead. Guys, when they are silent, What should you assume? Work in progress is on prime cost or production overhead? When they are silent, if they don't tell you, what should you assume? Work in progress is on prime cost or production cost? I'm sorry, I said production overhead. Production cost, prime cost or production cost? Work in progress. Production cost. Very good. Guys, if they are silent, you should always assume work in progress is on the production cost and not the prime cost. Okay. Now see, now they are telling us the work in progress inventory is increasing by 200,000. So can someone explain what are they trying to say? When they say the inventory is increasing, what does they mean? What inventory is increasing? Can someone explain? What does that mean when they say the inventory is increasing? From what to what? Yes, come on guys, quickly. Anyone who can unmute? Yes, very good. Compared to the opening balance, compared to the opening stock of work in progress, your closing stock of work in progress has increased by 200,000. When they say this work in progress is increasing, they try to say compared to the opening stock, the closing stock has increased by 200,000. That means, guys, if you take example, if the opening stock of work in progress is 200, let's say 100,000, how much will the closing stock of work in progress be based on this? Based on this, what will be the closing stock of work in progress?
300.
300,000, because it's increasing by 200,000. So it will be 300,000. Now, guys, if you want to find out whether should you add or deduct, you can, if you forget the easy way, you can even do like this and get the answer. Should you add or deduct? Should you add or deduct? Tell me. Add or deduct. 100 minus 300. Add or deduct. Yes, the net amount is deduct, guys. It will become 200 minus. So you should deduct. Guys, the easy way, I'll teach you all the easy way. Please make sure you remember that. Then you don't even have to do like this. You can just get the answer. Okay, so that means here you should deduct. You should deduct and then you will get the answer. Very good. Yes, Afka. What is the relationship between inventory and cost? Positive or negative? What is the relationship between change in inventory and cost? If you know that, guys, it's very easy. What is the relationship between change in inventory and cost? Yes, it is negative. It is negatively related. We say, guys, it is negatively related. It can be any inventory. It can be raw material. It can be work in progress. It can be finished good. Any inventory, guys, it is negatively related. What does that mean? That means, guys, if your raw material is increasing, your cost will reduce. Okay. If your work in progress is increasing, your cost will reduce. If your finished good, okay. Now, say me, guys, if your raw material is increasing, let's say all are increasing, okay? If your raw material is increasing, which cost will reduce? Which cost will reduce? Yes. Which cost reduces when your raw material increases? I mean, yes, the prime cost, right? When your raw material increases, or we can say the manufacturing cost. Okay, you can either say the prime cost or you can say the manufacturing cost will also, it will decrease, negatively related, right? So it will decrease. Okay, what about work in progress? For work in progress, if work in progress is increasing, your manufacturing cost will decrease. Your manufacturing cost will decrease. So I'll just put manufacturing cost here also. Okay, what about finished good? If your finished good is increasing compared to the opening stock of finished good, your closing stock of finished good has increased. Which cost will decrease? Which cost will decrease? Yes, very good. Cost of sales. Guys, because guys, finished good, you don't record it in the manufacturing account, right? Finished good, you will record it in the SOPL. So your cost of sales only will decrease, negatively related. If the raw material increases, manufacturing cost reduces. If work in progress increases, manufacturing cost is reducing. If finished good increases, your cost of sales decreases. This is what you have to remember. All you have to remember is, guys, negatively related. That's it. All you have to remember, it is negatively related. The change, okay? I'm not talking about the opening stock. I'm not talking about the closing stock. I'm talking about the change. When the closing stock increases compared to the opening stock, manufacturing cost decreases. When the closing work in progress increases compared to the opening work in progress, manufacturing cost decreases. Guys, do you understand? If you remember this, guys, you don't have to even put an assumption like this and check in the exam. You can directly put it as minus, because you know here they are telling the work in progress is increasing. That means you know it's negatively related. So your cost will reduce. So you can directly put it's minus. It's minus. Clear? So guys, see here, now you have to find the missing figure. So 2,400 plus x minus 200 gives you 4,000. What is x? How much is x? Can you all tell me? Quickly calculate and tell me how much is x. 2,400 plus x minus 200 gives you 4,000. How much is x? Very good. X is 1,800. So guys, your x will be 1,800. So the answer is 1,800. Answer is fourth one. Answer is fourth one. Please don't do this mistake. You will always be tested with this change. They don't give you the opening and closing stock, guys, in the exam. If you check the past papers, most of the time they don't give you the opening and closing, because they know students find it easy when you give it separately, opening and closing. So they don't do that. They always give the change, because when they give the change, some students, they don't know whether you should add or deduct. So they may get it wrong. So out of 100, your 1 mark is gone, just because you didn't know the relationship. So please make sure you don't forget. It's not difficult, right? Because all the inventories are negatively related to cost. Okay. So now let's go to question number 12. Let's go to question number 12. They have given you, using the following information, answer 12 and 13. Answer 12 and 13. I'll give you all 3 minutes. Quickly do it. Okay, I'll give you all 3 minutes. Send me both answers together. Don't send me one by one, and send me the answer number without sending the values. Okay. Send me 12 and 13 together, because it's connected. How many of y'all here are 2022 A levels? Raise your hand. How many of y'all here are 2022 A levels? Okay, three. Okay, fine. Four. Wait, I'll check. Amana, Amir, good job, Amana, you're correct. Both of the answers are correct. Go to the next one. Mishal, first one is correct. The second one is wrong. Afaza, both are correct. Good job. Hafsa, both are correct. Shimra, both are correct. Good job. Safa, both are correct. Hana, first one correct, second one wrong. Shifna, both are correct. And Sajida, both are correct. If I haven't told your name, you can send the answers again. So guys, I'll quickly draw the subscription account. Yeah, Shifna, both are correct. I think there are two Shifnas. Both of y'all, both are correct. I think this question is easy, no? We'll see. So they're asking you what is the amount you transfer to income and expenditure, and the subscription in arrears for the closing date. Closing date subscription in arrears. Okay. Others, send me the answers. The ones who are done, go to the next one. Nazifa, correct. Okay, let's start. The following information relates to a member subscription of a sports club for the year ended 31st December. So opening is given, closing is given. I will quickly draw the subscription. Guys, subscription in advance, asset or liability. Subscription in advance, asset or liability. You have received income in advance, liability. Okay, you received income in advance, it's a liability, so comes in the credit side. So opening is how much? 62,000, and then the closing will come in the debit side, right? So that is 53,000. Okay, and arrears, another word, guys, receivable. Subscription in arrears, another word for that is subscription receivable. It's an asset for you, right? You have to receive it in the future. So yes, income receivable comes in the debit side, opening balance, closing comes in the credit side, 84,000. Okay, now they say, so I have recorded all this done. Okay, so after that they say The club has 178 members on the starting date, and the annual subscription for one member is 2,000. Okay, so at the starting date, guys, there are 178 members and their annual subscription is 2,000. Let's just underline it and keep, because what if there are members who left the organization? We should consider that also, right? So I'll just underline it and keep, and we'll go to the next part. Subscription received during the year is 290,093. So if you receive, guys, you get cash. So when you get cash, your cash increases. You have to debit your cash. So credit your subscription account. You debit your cash and credit your subscription, 293,000. So if it is a not-for-profit organization, it's receipts and payments account. Okay, if it's a not-for-profit organization, we usually say it as receipts and payments account. Now go to the next one. 8 members have not paid for their subscription for the year 2018 and 19. And the club has decided to cancel their membership. So guys, there are 8 members who didn't pay their subscription for last year as well as the current year. And then what has happened is they have decided to cancel their subscription. Okay. So guys, the last year subscription in arrears of cancelled members, including the arrears of 84,000. Okay. Now see, guys, how many members you had? You had 178 members at the starting date. Okay, you have 178 members. Out of these 178 members, 8 members you have to cancel their subscription. 8 members you have to cancel their subscription. So the balance is 170 members. Up to there, all clear? Now they are telling, okay, so they are telling after that. Now see, 8 members they have to cancel it. Okay, so when it comes to the last year 2018, they didn't pay for that also. These 8 members, they didn't pay for the last year also. Can you all tell me how much is it? 8 members didn't pay the last year subscription. How much is that? How much is that? Eight members, very good. Yes, guys, 8 members, they should pay. Each member should pay 2,000. Each member should pay 2,000. So 8 into 2,000, that is 16,000. Okay, last year is 16,000. So then, guys, what else they are telling? Yeah. The last year subscription arrears of cancelled members, including the arrears, the English is wrong there, okay? They are telling guys this 84,000 includes the last year subscription arrears of cancelled members. So now what should you do to find the correct one? What should you do to find the correct one? It includes the last year subscription of the cancelled members. Can you keep it, guys? After you have cancelled it, can you still keep it? Now they are telling guys, you have already cancelled those members. After you cancel those members, you cannot keep their subscription anymore. Okay, so that is going to be write-off. You have to write it off because they are no more your members. So they are telling this 84,000 includes this 16,000. This 84,000 includes this 16,000. Read it again. That's what they are telling there. This 84,000, it includes the 16,000. How do I know? Because they told there, guys. See, they told here the last year subscription in arrears. This is the last year subscription in arrears of who? Of the cancelled members. Okay, they are telling it was included in the arrears of this 84,000. In this 84,000, last year members who didn't pay, which is 16,000, and now they have been cancelled, also is included inside this. So this value is wrong. You should take it out. You should take this 16,000 out just because they are no more your members. They are no more your members. You have cancelled them. You have cancelled them. So that's why you have to take them out. Are you all clear, guys? Are you all clear? So that is going to be 84,000 minus 16. So the correct arrears should be not 84,000. It should be 68,000. Anyone who didn't understand that? Just because they told guys the cancelled members arrears is already included, only I took it out. Just because they told it. That's why I took that 16,000 out. Are you all clear? If you all don't respond, I don't know whether you all are clear or not. Okay. Now see here. Now my question for you all is, what is the now subscription written off? It's an expense, guys. So you will debit your income and expenditure and you will credit your subscription account. Subscription written off is an expense for us. Okay. Now see here. No, Safa, you don't have to, because at the opening date, we didn't know that we are going to cancel, right? At the opening date, we didn't know these people, we are going to cancel them. So you can just keep this 46,000, but at the closing date, we knew that they are cancelled, right? So that's why we took it out. That's why we took it out. Now my question is, guys, is the subscription area 16,000 or a different value? Is it 16,000 or a different value? What do you say? Yes, come on, guys, quickly. I want your replies. First of all, you should think. I can't just keep on explaining. No use if you can't think by yourself. So tell me. No. This subscription, is it 16,000? Is it 16,000? Or should you include this year's one also? That's my question. You get what I'm saying? Okay, the ones who say, guys, ones who say 16,000, why do you say it's only 16,000 and not 32,000? What's the reason? Why? Why do you say 16,000 and not 32,000? Yes? Can you all say me? Why? Okay, guys. So it's like this, okay? Now, no. They say here, this 16,000 last year members, okay? Now, there is something like this. If you are writing off at the end, okay? If you are writing off at the end, Okay. Now see guys, like this. If you're writing off at the end, that means you have to include both the years. Okay. Okay. Yes. Now say here, guys, but the thing is, y'all can't. Okay, I'm reading your answers. That's what I'm trying to figure it out. How are y'all thinking? Now see here, the last year is 46,000, right? Last year subscription inside this 46,000 arrears, it includes this 16,000. Okay, it includes this 16,000 inside the 46,000 arrears, which is there here. It includes 16,000. Clear with that? Okay. Now what is happening is, now if it happens, if the write-off, okay, if the write-off happens at the start, okay, so that means you just have to write off only the previous year. Okay. If they tell you guys, if they tell you to write off both the years, what you can do is you can write off both the years. Now some of y'all are telling just because it's last year you don't have to. Guys, because it's last year one only, you have to do it this year. Do you understand? The last year subscription which you thought you will receive is already there inside this. The last year subscription which you thought you will receive 16,000 is already inside the opening balance. Now you should take it out. It's in the debit side. To take it out, you will credit it. You understand what I'm saying? Okay. The last year 16,000 you thought you will receive from the members. That's why it's there inside this opening balance. But to see guys, you have decided to write them off. If you have decided to write them off, you should take it out. So to take it out, you should write it in the opposite side. That's why I credit it here. Are you all clear? Out of these 178 members, 8 members, guys, you have cancelled them. So you will only need to receive from 170 members. Your income is only from 170 members. Each member should pay 2,000. So 170 into 2,000 is going to be, guys, 340,000. 340,000. So guys, your income for the income and expenditure, under the income and expenditure, your income will be how much? Your income will be 340,000. Let's see whether this one is tally. Both sides should tally. Let's see if it's tally. Yes. Guys, are you all clear? So the answer is second one and the fifth one. Can you all try the next one and send me the answer if you're done with this question, question 12 and 13? Can you all send me the answer for the next one? Yes, Shifna and Amana, correct. Sadida, check again. Which of the following is incorrect? Incorrect, not correct. Zahra, Shimra, correct answer. Aisha Salim, check again. Okay, let's check. So which one of the following is incorrect, not the correct answer? Okay, so see here, single entry system, about the single entry, okay, is an informal system of recording business transaction. Okay, now guys, single entry system means, you know what? Now, if you take a company, the company will have both methods, single entry as well as double entry. Okay, now if you take for example trade receivable and trade payables, what they do is, so they first of all they record in the prime entry. As soon as they record in the prime entry, subsequently they will record it in a single entry system, where they will open ledger accounts for each trade receivable and trade payable, and then record only one entry, not the double entry. And then in the prime entry, when they get the total of the prime entry, then only they will transfer it based on the double entry system. So if I was to quickly show you the, wait, I'll show you what I'm telling there. In the control accounts, you might have studied. Just give me 1 minute. Okay. It's like this, guys. First of all, you take transactions, you will record in the through the source document, you will record in the prime entry. As soon as you record in the prime entry, you will transfer something called to the subsidiary ledger, where they maintain single entry system. Okay, so every individual trade receivable, trade payable accounts are maintained here. And then at the end of the period, the totals only you transfer based on the double entry to the ledger accounts. That is how it works. Okay. So single entry system is accepted. They do that. Now, single entry is an informal system of recording transactions. Yes, it's an informal. That means, guys, you don't maintain double entry. You just every day when there is a transaction happening, let's say you have a transaction happening with A, you will keep on recording in A's ledger. Okay, so we can say, yes, it's like an informal. Single entry does not identify the dual effect of a transaction. That is what we call as single entry, right? Single entry means you don't record double entry method. You will only record one entry. Of a transaction, you will only record one entry, not the double entry. So dual effect means, guys, dual effect means the double entry. Okay, where you have to record in two places. When you are doing single entry, you don't record in two places. For example, let's say you make a credit sales. Sales account is credited, trade receivable should be debited. Let's say you made a sales to A. You will only go and debit A's account. You don't debit sales account. That is why we say we don't consider the dual effect. Only we consider the one. Okay, we only record it in individual trade receivable and trade payable. Now go to the next one. Single entry system is not an accepted method since transactions are recorded only on cash basis. Guys, that's wrong. Okay, single entry system is accepted, as well as, guys, transactions are recorded not only in cash basis, even in credit basis. When you make a credit sales also you record, right? So it's not only in cash basis. Actually, that is the wrong answer. Now see, single entry system is accepted as incomplete record since transactions are recorded are not recorded according to double entry. Yes, we can say that, guys, because we are not following the double entry system, the records are incomplete because you're only recording in the one ledger, you're not recording in the other ledger. Single entry system is unable to show the changes of business resources through business transactions. So, guys, you can't easily identify the changes in business resources because you're only recording in one place. You're not recording in both the places. Usually a transaction will have dual impact, but we are only recording in one place. Just because of that, guys, because of that, there is no, we can't easily identify the change. Clear? Answer is third one. Okay. Now, can you all quickly send me the answer for the 15th one? Okay, let's check your answers. It's a partnership question, if I'm not wrong. Yes, very good. Okay, the students who sent the answers so far, correct. Good job, correct. Others, send me quickly. If you're done, go to the next one. Okay, I think we can start. No, Jivana, correct. Okay, Hana, correct. Let's start. Question number 15. So there are two partners, K and N. K and N. Sharing profit and losses in the ratio of 3:2. I have told you all, when you read, if you see any information, just write it down. Okay, let's first of all read the requirement. According to the above, Patum's share of goodwill was acquired by K and N. Okay, so Patum's share of goodwill, which was acquired by these two people. That means Patum is a new partner. So see guys, here P has joined the partnership. The new profit sharing ratio was agreed as. So this was the old ratio. Okay, now the new ratio is what? The new ratio says as 5:3:2. Okay, 5:3:2. On the admission of P, the partnership goodwill was valued at 1,200. Okay, Khadija, correct. And it was adjusted through the partner's capital account. Okay, so the goodwill is 1,200. They are asking, according to the above, Patum's share of goodwill, which was acquired by these two. Okay, now guys, when there is a new partner, the new partner should sacrifice or does he benefits? Should he sacrifice his capital to the old partners, or does he get benefited? What do you think? Sacrifice or benefit? Because yes, if you're a new partner, you have to sacrifice to the old partners. You can't benefit because guys, the old partners started the business long time back. So it's unfair you get the same profit without sacrificing something. So what happens is, if you are a new partner, you have to sacrifice some capital of yours to the old partners just because those old partners started the business before you. Okay, you are new to the partnership, so it's unfair. Without sacrificing something, you just keep on getting the same profit. So because of that, the new partner has to sacrifice his capital, okay, to make it fair. So guys, you know the double entry, old ratio is credit, new ratio is debit, right? Old ratio should be credited, okay? New ratio should be debited. This is the double entry. This is how you make the double entry when it comes to goodwill adjustment. Old ratio credit means your capital increase or decrease. Capital is an equity account. If you credit, your equity will increase. If you debit, your equity will decrease. Okay. Now see guys, the old ratio was this one. Let's do it quickly. So 1200 into 3 over 5. 3 over 5. That is 720. I don't think you need to do all this. I'll just do it for your, yes. Okay. Now say guys, then for N, the total is 1200 goodwill. Out of that, N is getting 2 out of 5. I'm doing the old ratio, okay? So that is 480. Now new ratio debit. New ratio debit means it's minus. You have to reduce it, okay? So that is 1200 into 5 out of what? 5 out of what? You should take the total, guys. That is 10, right? 5 plus 3 plus 2 is 10. So 5 out of 10. Okay. So that should be minus actually, not plus. Minus 600. Then go to the next one. N. N is, guys, 1200 is the total. Out of that, 3 out of what? 3 out of 10. So that is 360. Since it's debited, you should minus it. Then the last one, okay. So P, Patum should be how much? That is 1200 into 2 out of 10. That is going to be 240. 240. Okay, 240,000. Now see here, now let's get the net amount. Let's get the net amount. Let's see how much, what is happening. Now the net amount, guys, if you take here, now can someone tell me what does this mean? This is the net impact, okay? This is the net impact due to goodwill. Due to goodwill, this is the net impact on the capital. Net impact on the capital due to goodwill. So they're asking, according to Patum's share of goodwill was acquired by K and N. How much was acquired by K and N? So K has acquired. Guys, see here, P is a new partner. He had to sacrifice 240 out of his capital. He had to sacrifice 240. When he sacrificed 240, K got how much? K got 120 and then N got 120. So guys, see here, the new partner, when there is an admission, the new partner should sacrifice his capital to the old partners. Okay, so all partners will get the capital from the new partner. So that means all new partners should sacrifice 240,000 so that K and N gets 120,000 each. So they're asking how much is K and N getting? K and N is getting 120,000 each. Each person is getting how much? 120,000. Answer is first one. Answer is first one. Okay. I hope y'all are clear. Guys, tell me, if then when there is an admission, if the new partner has to sacrifice his capital, there is something all partners should sacrifice. What are they? What should they sacrifice when there is an admission? New partner should sacrifice his capital. What should the old partners sacrifice when there is an admission? Very good. They have to sacrifice their profit sharing ratio. They have to sacrifice their ratio, guys, profit sharing ratio. Before, they might have earned a very good profit. That means their share would have been big because it's 3:2. Now their share would have been divided because P also came. Now we have to give something to P also. So that's why, guys, what happened, the profit sharing ratio should be sacrificed by K and N just because P came. They have to give from their ratio to P, okay? Because he also should get the profit. I hope y'all are clear. Now go to 16th one and send me the answer 16 and 17 together. Do it quickly, guys. Okay, let's start. Question number, I didn't check your answers. I think most of y'all have sent the same answers. So wait, I'll just confirm because all of y'all have sent the same answers. So that means it might be correct. Yes. Yes, guys, so far all of y'all are correct. No, Michelle, they won't test like that. They won't test, guys. We are in the middle of the year. New partner is coming or a partner is leaving. For your level, they will only test on the starting or on the end. That's it, not in the middle. Now, question 16 and 17. If the business used weighted average cost method for issuing inventories, what is the cost of the sales? Okay. The next question, if they use FIFO method, what is the cost of sales? Let's do FIFO, guys. FIFO is easy when it comes to part 1. Let's do FIFO first, okay? 17th question. Now, guys, I'll teach you all easy way to take the FIFO answer. So now see here, how many issues you have made? How many issues you have made? Because they're asking the cost of the sales, right? Cost of sales is the number of units sold. What is the cost of it? How many units have you sold? Just check the sales and tell me how many units you have sold during the year or during the month. How many? 70, right? You have sold, guys, 70 units. So now you have to find the cost of these 70 units. You have sold 70 units. So you have to find the cost of these 70 units. Clear? Now, guys, how to find the cost of these 70 units? Listen carefully. First in, first out. Which we assume that this is just an assumption. We assume that whatever units came first goes out first, just for a pricing method. Okay, that means, guys, now say the cost of sales, will it include the goods, the prices of the goods, the price which came first or the goods which came last? Think and tell me. Cost of sales in FIFO method, will it include the goods which came first or the goods which came last to the business?
First.
Yes. Guys, which came first? Because first in, first out says which came first goes out first. So then, guys, if cost of sales is the cost of the goods you sold, so you will sell the goods which came first, right? So this 70 units which you have sold will include the price of goods which came first. What about closing inventory? If they have asked you to calculate the closing inventory, will it include the last or the first came goods price? Last. Very good. Guys, your closing inventory will include the last price if it is FIFO, because we say, guys, first in, first out, whichever came in first goes out first. Okay, so that means closing stock is the goods which you haven't sold yet. So if you haven't sold yet, that means it is going to have the latest price, the goods which came at last. You should remember that. Now, guys, you know that cost of sales in FIFO will include the goods which came at first. So that means now you have to sell 70 units. There are 2 purchases you made. Which is the first purchase you will take? Which is the purchase you will take? Is it the 3rd of 16th March? 3rd, right? Because first in, first out. You will take the goods which were sold on 3rd March. Okay. So you have sold 50 units on 3rd March. What is the price of these 50 units? Price is 15,000. 15,000. So 50 units into 15,000 will give you the cost. How much is the cost? 50 into 15 is 750. Guys, is it enough? We have sold 70 units. Is it enough, or how many units you need more? Is it enough, or how many units you need more to sell 70 units? Yes, you need another 20 units more so that it becomes 70. Now you have already used all the units from 3rd March. Now you have to go to the next one, that is 16th March. Okay, out of this 16th March, you have purchased 50 units. You have purchased 50 units, but you don't need all 50 because you have only sold 70 units. That means you need another 20 more to make it 70. Okay, so guys, this 20 units and the price of each 20 unit is going to be 21,000. Price is 21,000. Okay, so that is, guys, 20 into 21,000 will give you 420,000. So how much is your cost of sales? Your cost of sales is 1,170,000. Answer is second one. 17th one, answer is second one. Clear? So guys, if it is first in, first out, please do this easy method. Don't waste time. Okay? Don't waste time doing it using the store's ledger and doing it one by one. It's a waste of time. Okay? Listen. I'm doing 17th question. I didn't do 16th yet. Okay? So now see here, I'll explain one more time. If they have asked you cost of sales in FIFO method, always check how many units you sold. Okay, that is the first thing you have to check. So when you check 40 plus 30, you have totally sold 70 units. Now you have to find the cost of these 70 units. So first in, first out, usually sales the goods which came first will be sold out first. So that is, they will sell, now the 3rd March only they will sell first the goods which came on 3rd March. But that is only 50 units. You need another 20. So you will go to the next purchase, that is 16th March. But you don't need all the 15, 16th March. You only need another 20 because you have totally sold 70 units and 50 units was already taken from March 3rd. So you need only another 20 units. Clear? So that is why we took it from the next one, that is 16th March. So the total final answer will be 1,170,000. Now are you clear? Okay, now go to the next one. Weighted average cost method. Guys, weighted average cost method is where you are taking an average price. Okay, in FIFO you just take the price which came first, goes out first, right? In weighted average cost method, you take the average price always before you make an issue. Okay, now every time you make a new purchase, you have to find what is their average price. Okay, now see, you have purchased on 3rd March. Okay, you have purchased how many units? 50 units, and the price of one unit is 15,000. Now guys, see here, so since there is no any other purchase, we can take that as the average price, 15,000. How to find this weighted average prices? You have to take the value at the issuing date divided by the quantity at the issuing date. Value divided by quantity. The thing is, guys, if you take here at this date, you have only one purchase. So if you want to find the average, again, you will get the same 15,000, right? Because there are no more than one purchase. So you don't have to find for the first one. You understand what I'm saying? Because that is the first transaction. Okay. So then, guys, the average price is how much? 15,000. Now you have sold only 40 units. Okay. At the first, you have made a sales only 40 units. Now these 40 units which you have sold, guys, what is the average price? What is the average price of these 40 units which you sold? What is the average price? 15,000, right? These 40 units which you sold, the average price is 15,000. So 40 into 15,000. Okay. Now, why am I doing like this is because, guys, in this weighted average cost method, every time you make a new purchase, every time you make a new purchase, your average price changes. So that's why I'm finding only up to this. Okay, so you're making a sales here. So when you make a sales, you're making 40 units sales, but you're totally selling how many units? You're totally selling 70 units. Okay, now 40 units sales which you have made, the average price is 15,000. So 40 into 15,000 gives you 600,000. But guys, after that you made another sale on 20th. Okay, now see here, for this sales, listen carefully. You have to find the weighted average price. You have to find the weighted average price. Out of this 50 units which you have purchased, you only sold 40 units. What is the balance units? What is the balance units from the first purchase? 10, right? Out of the 50 units you purchased, you only sold 40 units. You have another balance of 10. Guys, see here, this is how we find the weighted average price. We will take the value at the issuing date, okay, divided by the quantity. Now, you're issuing on 20th March. To find the value, what you have to do, you have to take the quantity, that is 10 units, multiply it by the price, 15,000. Not only that, there is another purchase that is 50 units and the price is 21,000. See, this is how we find the average. Totally, how many units are there? 10 plus 50. Totally 10 plus 50 units are there. So guys, weighted average price is the value at the issuing date divided by the quantity at the issuing date. Clear? So you have only 10 units from the 3rd March purchase. So 10 into 15,000 and the balance purchase is 50 into 21,000. You have to divide it by quantity. 10 units plus 50 units give you 60 units. How much do you get? What is the weighted average price? When you do this, guys, what is the weighted average price you get? Quickly do and tell me what is the weighted average price you get. $20,000. Okay, guys, the weighted, don't say just 20, it's actually 20,000. Okay, the weighted average price is 20,000. Now you're selling 30 units. The price is how much? 20,000. So that is going to be 30 into 20,000 will give you 600,000. What is the cost of sales? Cost of sales is 600 plus 600, 1,200,000. So the answer is going to be the fifth one. So when it comes to MCQs, guys, a FIFO method is much easier compared to weighted average. But when it comes to part 2, I believe weighted average is better. I don't know, but whatever, both are easy. Both are not difficult. But when I compare, yeah, FIFO is easy when it comes to part 1 and weighted average is easy when it comes to part 2. So guys, are you all clear with that? Can we go to the next one? Okay, so when it comes to part 1 questions, these questions, guys, don't waste time drawing the stores ledger. Okay, it will take a lot of time when you start drawing the stores ledger and stuff. You just have only 2.4 minutes to do the question. So make sure you do it as fast as possible. But for that, you should also get the correct answer, okay? No use of doing fast if you don't get the accurate answer, right? So for that, you have to practice, guys. You have to practice without doing stores ledger and check whether you can do it by yourself without having the stores ledger. Clear? Only for part 2, use the stores ledger, okay? Now go to question number 18. Go to question number 18. Quickly send me the answer for question 18. Okay, let's check your answers. Question number 18, no? Question 18. Okay, let's see your answers. Fatima, Zahra, check your answer, dear. Mishal, check your answer. Question number 18. Others correct. Good job. Others correct. Which of the following factors should be considered in determining the amount of annual depreciation? Guys, easy way. Now, you know the equation for depreciation, right? What is the equation for depreciation? Depreciation is equals to cost minus residual value or the scrap value. Okay. And divided by the useful life. Divided by the useful life. This is the equation, guys, for depreciation. Okay. Now, see here. The other way you can do is you can even tell cost into depreciation rate. Okay, now with this equation itself, you can get the answer. What will affect the depreciation amount? Okay, so if any of one of these is changing, your depreciation will be changed. If your cost changes, if your residual value changes, if your useful life changes, if your depreciation rate changes, what happens is, guys, your depreciation will be affected. So these are the factors which will determine your depreciation. So question 18, let's see here. Cost of the asset. Yes, see here, cost of the asset will affect the depreciation amount. If the cost is high, will the depreciation be high or low? If the cost is high, will the depreciation be high or low? Yes, what do you think? It will be high, positively related, right? So if the cost is high, depreciation is high. So that is affected. Next one, physical deterioration. What do you think? Physically, it's your asset value is reducing physically. Will it affect? Yes or no? Yes or no? Guys, now when it comes to depreciation, we don't check whether it's physically going down or coming up, right? We take the equation and just calculate. That's why we say depreciation is a systematic allocation. We say depreciation is a systematic allocation of depreciable amount over its useful life. So when you're calculating the depreciation, do you ever check the physical deterioration? No, you just take the cost minus residual value divided by the useful life. You get what I'm saying? That's how you do. Guys, then why when do you consider this? When do you consider? Guys, usually if they ask you in your exam, if they ask you, what is the reason you have to depreciate? You can say this. Because naturally, because of the asset value is reducing, only you have to depreciate. This is a reason why you have to depreciate. But to calculate the depreciation amount, we don't check this. We just use an equation, okay, and do that. Rate of depreciation, yes. And the useful life, yes. See, depreciation rate is affected. Useful life is affected. Answer is A, C, and D. Fourth one. A, C, and D. Answer is fourth one. Are you all clear? Guys, when it comes to accounting, we just do a calculation. We don't check it. Okay? No, physical deterioration means maybe due to a damage or something, your asset is physically going down. Okay, we don't consider that, right? When we are depreciating, we just take the cost minus residual value divided by useful life. If the asset is fully damaged or what do you do? If the asset is fully damaged, what do you do, guys, in accounting? You cannot use the asset anymore. What do you do in accounting? Yes? No, Vishal, that's not correct.
Disposal.
Yes, you dispose. Guys, if your asset is fully gone, you have to dispose it. That's why we have something in LK 16 called disposal of PPE. So when your asset is fully gone, we have to do disposal. Jivana, this is a non-current asset. This is not a stock, dear. Okay. Now see here.
Miss,
Go
can
to
we take physical deterioration as like as if the efficiency of the machine or something decreases when time moves on?
yeah, that is what physical that means. But the thing is, we don't consider that when we calculate. We just use a systematic method. We just use an equation. Okay, we don't go, guys, we don't go to the assets every single year. We don't go and see how much have they physically gone down, how much have they physically gone down. We don't do that. We just put a calculation and find out. You get what I'm saying? That's what we do. Okay.
Yes, miss.
Okay, now go to question number 19. Go to question number 19 and send me the answer. Aisha, we consider, if the PP is damaged, do we consider it as an expense? Usually, if the PP is fully damaged, you cannot sell it anymore. You have to fully dispose it. Then you have to consider the full amount as an expense, right? Okay, but we call it as the disposal loss. But if you can sell it for a certain amount, then you have to open the disposal account and find it. You get what I'm saying, Aisha? If your non-current asset is fully damaged and you cannot sell it for any price, the carrying amount of the non-current asset, you should write it off as an expense because you cannot use it anymore. And you should take it out from the PPE. But if you can sell it for a certain amount, you can open a disposal account and find the disposal loss or profit. Okay, send me the answer for question 19. So far, all of y'all are correct, okay? All of y'all are correct when it comes to question 19. Okay, let's check the question. Which of the following features or measurements should be considered in recording provisions in financial statement according to LKS 37? So guys, in order to record something as provision, there are three things you should check. Okay, one is it should be a present obligation as a result of a past event. Okay, it should be a present obligation. That means, guys, for example, I'll take you through with an example. Let's say you have sold goods on warranty. Because you sold goods on warranty, you know, at the date of sales, when you make the sales, you have an obligation today that because of yesterday you sold goods on warranty. Let's say you sold yesterday, today you have an obligation, because guys, you know that any customer can ask you for warranty claim. So you have an obligation. If the customer comes and asks you for warranty claim in the future, you have to give them. It's a liability for you. So that's why we say it's a present obligation as a result of a past event. It has a certainty about time or the amount of the obligation. Correct or wrong? Correct or wrong? It has a certainty of the time or the amount of obligation. Guys, see here, if I was to show you the definition, okay, go to the chapter provision, okay. If I was to show you what does provision means, provision is a liability which is uncertain of timing and amount. That is the definition of provision itself. We say, guys, provision, it is uncertain. We are not sure when will the customer come and ask. And we are not sure how much will the customer come and ask. You get what I'm saying? We say it's uncertain. We are not sure. We don't know when we give the warranty, guys. We give the warranty. Do we know how many customers will come and ask? Do we know how much we have to spend in the future? We don't know. And we don't know when will they come and ask. So we say provision is a liability uncertain of timing and amount, but they say here it is certain, which is wrong. Next one, the amount of obligation can be measured reliably. Guys, even though you are not sure, based on your past experience, you should be able to measure the obligation reliably. You're not sure how much. You don't know. You're uncertain about the amount. But guys, based on your past experiences, based on how much customers come and ask, based on that, you have to be able to estimate. Estimate means just give an estimation of the future. This much, like we can say, okay, around 10,000 rupees will be our provision. In the future, customers can come and ask around 10,000. You should be able to estimate it reliably. Okay, so that is also correct. See, guys, see, it should be a present obligation as a result of past event. The amount of the obligation should be measured reliably. The last one, it has a probability of the outflow of embedding economic benefits, which will require when settling the obligation. Guys, you should be more than 50% sure. Probable means you should be more than 50% sure that in the future, your benefits will flow outside the business when you're settling this warranty. Okay, now you know your customers in the future will come and ask for warranty. You should be more than 50% sure that when you settle the warranty, you will have an outflow of benefits. That is the third requirement. Probable outflow of resources embodying economic benefits will be required when settling the obligation. It will be an outflow of benefits. The word probable is very important. Answer is A, C, and D. Answer is the first one. A, C, and D. Guys, answer for that one should be the first one. Clear? Okay. So guys, we stop it here. I'll tell you when is the next class. Okay, we will be continuing with the question 20. Okay, I will let you all know when is the next class. I hope you all benefited through today's class. Please keep on studying, guys. You all just have 25 or something days more. So don't give up at the last moment. Make sure you all continue studying and motivating your own self, because no one is going to motivate you. You should be your own motivator. Okay, when you feel down, just think about your goals, whatever goals you wanted to achieve. Always think about that. That will be one of the best motivations, what you wanted to become. Okay, so when you feel demotivated, think about that. You will try to come back again stronger. Okay, so let's stop it here, guys. Take care. Study.